Staying with us, well, markets are today rewarding companies which have come out with good set of numbers, and one stock on my screen is Indian Hotels, 154. 5% higher for Indian Hotels. The institutional holding pattern of Indian Hotels now seems to be indicating that long-only mutual funds like Reliance and others have moved in. So we'll talk about the hotel industry, the slowdown, the rebirth of Indian Hotel, how exactly they are looking at changing their business model, and globally what is happening to hotel stocks. Now, first what we've done is that we've looked at the 5-year change for Tata Group of companies, even though you cannot compare all of them. It's comparing apple and orange. But in terms of in comparison, this is where how last 5 years Indian Hotel has done versus other hotel group of stocks. And Indian Hotel is right up there. In terms of where the global hotel industry is moved in versus what Indian Hotel has given, it has been not the best performer, but it has been an outperformer in last 5 years. Indian Hotel has given you returns better than Mandarin Oriental. I didn't know that. And even, Hilton for that matter. Within the Tata Group of stocks also, Indian Hotel has emerged as one of the outperforming stocks. And the reason why that's happening is because they managed to fix their balance sheet, recapitalize it, and now all the ratios are at a multi-year high. So let's take the conversation forward. Puneet Chhatwal joins us, Managing Director and Chief Executive with IHCL, Indian Hotels Company Limited. Puneet, good morning. Thank you for joining us. Markets are reacting to the numbers. So they like what you're doing. Before we get into specifics, tell us what has been the impact of slowdown on your business?
The impact of slowdown for the industry in general and for us has been there. So same time last year, we would have thought we will do possible double-digit growth. So we had to come back to kind of single-digit, as our business has a direct correlation with the GDP growth globally and not just in India. However, we have been able to, and that's the job of the management, to maneuver through these headwinds and put strategies into place so that we have no impact on our earnings.
So how do you maneuver these downticks in the economy? Do you bring down your ARRs? How is it that you work the math around?
Yeah, I think that's it's an interesting one that you said, but that's exactly what happens. Okay. So the volumes increase, your rate becomes less aggressive. And once the volumes increase, then you again start increasing the rates. That's very typical of the industry globally. However, and having said that, I think we have been on a journey of using 5 or 6 key levers to improve our performance. And one of that has been that our growth. So we have been adding hotels and our ambition is to add a hotel per month. And all these hotels are on a fee-based model or without investments from us. So as more and more hotels come online, they definitely compensate for the lack of double-digit growth.
So for the layman, you run it, you don't own it?
We run it and we don't own it. We are mainly like a service provider. So this year, for example, we opened in April in Goa. We took over the Siddharth Goa. We took over in May the Taj in Convention Center in Agra. We added a few more properties and the Ginger brand. We're going to open our 50th Ginger hotel at the end of this month in Surat. And a few days ago, we opened in Patna. I think because of that and our ambition to open a hotel every month on a fee-based or a not out-of-pocket investment model from us, that is a very big supporter of our earnings going forward.
Okay.
Number third is we have kind of communicated a very comprehensive brandscape. And we said we will unlock the potential of all our brands. So 30, 40, 50 years ago, when certain brands were done, they were all done to support the Taj brand. I think over the years, they've become very mature and businesses could be made out of them. And one such example is, let's say, the offering of our Chambers Club, which will be opening in London in April, also in West End in Bangalore. And we are adding another floor to the Chambers at the Mansingh in Delhi, which will be a state-of-the-art thing. And I think it was one of the most privileged club to be a member of. And by adding these kind of new dots on the map, we take it to a very next level, and it has the potential to become a business on its own.
Okay. Now, so let me paint Indian Hotels 3 years ago versus now, versus your aspiration of 2022 versus where it could be. The most important feature which a shareholder looks at is that how much money are you making for the capital which you're putting in. Your margins were at 15.8%, now at 20. The aspiration is to take it to 25. How can you achieve that? Cost cutting in this industry can only happen to a limit, which means either you're looking at a huge operating leverage kicking in or changing your business model.
So I think you you answered the question yourself. So one of that, at some point, growth will kick in this 5-year business cycle, and at some point you get the headwinds also in the 5-year business cycle. So at the moment we have headwinds, at some point we'll get the tailwinds also because you're coming from a lower base. That's one. But the second most important factor is the change in the business model. So if the more service-based contract that we add, the more management contracts we add, the more operating leases we add, will add to our margin expansion because mathematically it works that way. And as we have communicated to the market, we'll add 15 hotels to our pipeline every year. At the moment, we are ahead of our guidance and we've been able to add 36 contracts in 18 months. So I think we said 75 in total over a 5-year period, and of which a net growth, because everything will not be built and open, would be anywhere between 50 to 55 properties. We are very much in line with that aspiration, and mathematically it will change also, or help change our ratios on the margin expansion ambition that we have communicated.
So both on RevPAR, your numbers are better, F&B, your numbers are better across the board. What other cost control measures have you possibly been taking in order to beat the overall trend in the market?
So there are two things, Abha. I think you said, so in order to get higher numbers, you don't cut costs. So what we've done is we've done tactical, advertising and other steps to improve our market share. So when the top line growth is not coming the way we all expect it to come, the only tool management has is to increase its market share. So I think we have done that consistently, and we shared that in our investors call, that in the key markets in India, we had a higher share than the RevPAR growth in the market. So that's been positive. And on the cost side, we have not increased the cost because when we add new properties, you don't have incremental costs of building a loyalty system. You don't have incremental costs of having another vice president of marketing or branding or sales. So I think your overhead cost as a percentage of revenue starts becoming more efficient. And I think that's a trend that most analysts have observed with us over the last few quarters.
So what you're saying is that whatever expansion Indian hotels will do, the expansion would be on the lines of fee-based income. It will not be a hotel which you will incubate, which will be owned by the company.
I think what we have said is not we will be 100% asset light or we will be asset heavy.
Future expansion.
So yes, for future expansion, what we said is we will be using a strategic stake if necessary. So one of the 36 contracts that we added is in Lutyens, Delhi, in which we are spending money for the Connaught. Now, Lutyens, Delhi will stay Lutyens, Delhi. It makes sense there to have a license agreement and to make certain investments. And if it is 1 out of 36 is fine. If it's 2 out of 36 is also fine. What we'll definitely not do is increase that to more than 10%, but strategic investments which help take the branding charge, which support our brands, make our brands, which is a brand enhancing market, brand enhancing location. I think that we will definitely take a sliver equity stake. We have created a platform with GIC on that to benefit from assets that might be non-performing for others, how we could take them onto a platform with GIC and have a very small stake and reposition them and earn them not only from management fees, but by turning around that asset over a 5 to 10 year cycle.
Okay. But tell me, how are the international businesses doing, properties?
I think we are very blessed to have presence internationally. I think it should be a proud moment for everyone who went, let's say, to London to see the World Cup. If India did not win the World Cup, at least they got to stay at the Taj in St. James and Buckingham Gate, right? It
What a
was
location.
full, and it was a great occasion. Every year at the Wimbledon, it's full.
Aisha was there.
And and we have had great performance. The first 6 months of London this year, despite all the discussion on Brexit, I would say have been the best in the last 7-8 years for us in that market. We have witnessed a very good performance in San Francisco. We have improved significantly our performance at the Pierre. There are certain markets internationally that suffered and will always be there, like Sri Lanka. So if there was a terror attack in April, then that market just went south, but we don't own the assets. So some of these markets, we have management contracts, and which doesn't help. I think the terror attack should not happen in the first place and spoil the market. But mostly these hotels are doing well. The Samudra in Colombo has bounced back very strongly. Maldives is doing fine. Dubai is very stressed in terms of rates, but the occupancies is good. We have one of the best performing properties there. Our hotel in Cape Town is improving by leaps and bounds every day. So I think we are very blessed to be in some of these fine locations. We are opening 2 more hotels in Dubai in the next 12 months. One opening next month in Jumeirah Lake Tower, and the third one just before the Expo comes to Dubai on the Palm. And then there is a 4th one also that will be Dubai Dera waterfront, which will take another few years. But we have 4 Taj properties in Dubai.
So what is besides Dubai and all the other new properties that you talked about, you're not looking at exiting any of the existing ones, the international properties?
Ideally not. Ideally we want to grow our footprint. True. And we don't want to exit, but sometimes things happen in a marketplace which are beyond one's reasonable control, but I think we are very
As of now, do you think there are any of those potential exits that
nothing that I or my colleagues are aware of that anything like this would take place. We feel very proud to have a property overlooking the Central Park in New York and a property just behind Buckingham Gate. The question is, when are more of those going to come on a management contract basis where we don't have to invest? We invested in these markets to get the entry, to remove the entry barriers. Now it's a question how we will utilize our presence in these markets to grow on an asset-light model.
So just to get it right, when you're expanding in India, what kind of targeting are you doing? You know, you've opened a hotel in Rishikesh. That's not a city. That's a place where you go to enjoy a holiday. It's an experiential place. You've got a hotel in Jin Corbett. Again, it's completely targeted towards an experiential holiday. Safaris, palaces. So Indian hotels, will it be known as a hotel chain which will give priority to city and business travel, or the experiential travel?
Well, our Aspiration 2022 underlines what we have been known for as the most iconic hotel company produced in South Asia. And within that, we have been the organization that since last 3 decades has pioneered certain destinations. We first moved into Goa with the Fort Aguada in the 70s. We created the destination like Kerala. We are the first ones to go with the state-of-the-art property in Havelock in Andaman and Nicobar. It's the first zero single-use plastic resort that we have, so which we're very proud of. Without shelving even one tree, we built that hotel out there. Rishikesh is another example. So we want to defend our position of being the largest resort operator in luxury segment in India, which we are today and which we will be tomorrow. And that definitely is very good, because when times are not good, still people go on holidays. So I think that's another reason why we have done better than others, is because we have a right combination of resort and business locations.
I know never to ask a parent who's the favorite child, but what's your favorite IHCL property?
My God, there are many. But
still, something closest to your heart.
One which I would say is the most pictured hotel in the world is the Lake Palace in Udaipur.
Oh yeah, of course. Yeah.
And I think a lot of people would say, well, why not Rambagh, why not Umaid Bhawan? They're all great. So it's very difficult to say which is favorite. But what I'm saying is this is the one which has been pictured the most in the industry globally. So as somebody of Indian origin, let's be proud of it.
I think the James Bond movie was shot there, Octopussy.
Yes, the Octopussy was shot there. That's true.
Just want to, get your sense on when you see the market rebounding overall, when you see pricing power coming back, really, that's I think the one thing that everyone would want to know. And at certain ends of the spectrum, is it inelastic, as you just mentioned, with luxury or experiential?
It might be a bit premature to say by a week or so, but what we are witnessing in November is very historic. Diwali last year was in November, so this year it came in October together with Dussehra. So October was more or less like flat, but November is a very, very high double-digit growth in the month to date. And there will be a certain dip coming in because it's not a like-to-like comparison. But if November goes the way it's projected to go, I think we're already on the way to recovery.
You've reduced your debt. It was a huge problem when you expanded, when the slowdown hit you. 4,000 crores has come down to 2,000 crore. I'm assuming that you've cut your losses at some properties. And as you move into more fee-based contracts, your cash flows will improve. So if you're getting more cash flows, how are you planning to use them?
Well, we remain focused, firstly, on not increasing the debt. That's number one. Ideally, reduce the debt. We just unwound a swap a few months ago, and we'll be refinancing some of it, which is coming for refinancing in December, which will be at favorable terms. So that's already a positive. The third is, as we grow, and as you rightly said, our cash flows grow, your ratios of net debt to EBITDA will keep improving, as we have improved in the last 5 years, coming down from 6.5 to now less than even 2 in the latest reported results. And whenever we have a demonetization of a non-core asset, either that capital will go into acquiring a strategic asset on the GIC platform, or it will go into the reduction of debt, or it will go into building certain other competitive advantages which will continue to drive our top line growth.
What is your internal assessment of the non-core assets you're sitting on? What is the
non-core assets is like, 30, 40 years ago, we bought 100 plus flats. So do we need to have own flats today?
What is the value of the total non-core asset within your balance sheet according to you?
Non-core assets would be valued, let's say just the apartments could be worth 200 crores.
And there are some more hotel properties which are as non-core?
There are properties which are in secondary and tertiary markets. 30, 40 years ago, a hotel company in India was an owner and operator. Yeah. Today, there is enough private equity, there are enough investors. We don't need to own hotels. So last year, we sold properties in Visakhapatnam, in Trivandrum, in our subsidiary or as associate in Oriental Hotels, and brought down the debt in that company.
Do you have land bank also? Because you've sold some land to Marriott, apparently couple of Chalet Hotel. I think you've sold a land parcel couple of years ago.
That was many years ago, so I don't know the details of that. But we have a great opportunity of utilizing, for example, a land bank in Santa Cruz, right on the main road, and we want to build a flagship Ginger. We have owned that. It's a land that belonged to the old flight kitchen, and we moved the flight kitchen. The land is there, so I think that will help us, give the branding charge to Ginger and help in its repositioning going forward.
Okay, well, appreciate your time. Good luck. It's such a fascinating conversation that we can get into where the hotels and the tourism industry is moving. But the market is reacting, which is good. I didn't realize till I met him that the debts come down from 4,000 crores to 2,000, and it's projected to go lower. So appreciate your time.
I think more importantly, you should come and enjoy some of our hospitality and spend some money in our hotels, which are running through this channel.
Do that. We have
hold your conferences with us and see what a Lake Palace or a Umaid Bhavan or Rambagh Palace can do.
I agree.
How about that? Abha and I should go.
Right now, we have to just focus on markets, and that's what we're going to do. It's been a wonderful conversation, but we need to move on to do